Happy Friday, everyone. Welcome to the WSBA's Crypto Roundup for July 24th, 2026. Ron Quaranta here with my amazing friend and co-host, David Brill. David, I think Josh will be popping in somewhere in between limo rides. It's good to see you, buddy. For everyone in the audience, thank you so much for joining us on LinkedIn Live and X and on YouTube. Before we begin, our usual disclaimers. Obviously, nothing we're discussing is any sort of investment or legal advice. And really, the conversation is our respective opinions, not necessarily the opinions of our respective firms or organizations. David, another busy week. You and I keep texting back and forth about the latest articles and headlines. Look, the top of mind, David, is Clarity Act. And I think you and I and a bunch of others started the week with, yeah, things look pretty good. And I find myself looking too much at the statistics of Polymarket Ecology around below 40% on now Clarity. David, I know you got something you wanted to read for the audience as well, but take us away, man.
You know, we're broadcasting what may be one of the most consequential, days of the year for our industry. The Clarity Act is in its final hours before the August recess. And like you said, as of this morning, Polymarket odds have slipped from 48 to 38%. Look, we've gotten language from the Trump administration. They've agreed to ethics language, and that dropped Monday. The Democrats aren't satisfied, and the Senate still doesn't have 60 votes. And August 7th, which I think is, really needs to be held for a vote by August 7th, is 2 weeks away.
Yeah.
So I guess the question really is, this is really our show to find out whether this week, if Washington finally delivers, or the week the industry learns it has to wait till 2027.
Yeah. David, I want to peel back the layers of that a little bit if we could, because when we talk about Clarity, for a long time it was ethics and it was DeFi and it was all of these things.
We're
just down to ethics. We see you, Josh. Can you hear us? It's the technical difficulties, David, the raw production value. But David, let's peel back the layers there. And I do want to do a shout out to Jason Gottlieb and David Wysocki, WSBA members. I had posted internally, David, for the group, asking the question of, well, why isn't it important for states' attorneys general to be involved in some of the enforcement of ethics violations when that may not necessarily be what happens with equities or securities, for example? David, can you answer that a little bit?
Well, look, I think that in the case of President Trump, there's been litigation brought by state attorney generals, and I think many people believe that the New York State AG, really went out of bounds in the claims that she was bringing, and there's been a lot of blowback from that. So it's understandable that the administration would want it to be at a federal level, any kind of prosecution. But again, I think for any administration, the expectation would be that the Department of Justice would bring any kind of federal action and not having random states have the ability to bring action. So I think from a very consistent standpoint, a federal body would be the one that would be, enforcing this new law that would come into effect.
Yeah.
And I don't think it's really realistic to allow states, to have that right as well.
David, let me pause right there because I know we can see Josh, and I'm sure the audience is grateful that they can see Josh and don't have to worry about seeing you or I, but I don't know if we can hear her. Josh, can you hear us?
I can hear you just fine. I couldn't hear you at first. And also I was on a different, can you hear me now?
We can hear you now.
Okay, great.
David, Josh, I want to peel back the layers there as well. And David, I'm with you, and I understand conceptually you're both attorneys. I'm not an attorney. We have litigators that are our colleagues in the legal working group. David, Josh, how do you respond to that ethics pushback when we talk about the Clarity, when we have some colleagues that say, look, DOJ will never prosecute, it's kind of subsumed under the executive branch. And I don't want to get into the politics of it, but David, Josh, how valid an argument is that for states' attorneys general being involved in ethics enforcement?
I mean, I guess while I don't have the same vantage point as perhaps David or Adam, what I would say is, we're trying to get a compromise here. We're trying to get a bill through. This is what it seems to be taking. And I think that's how I view a lot of the bill, is just, look, this is what people think can get passed. So whether we think it's ultimately like the best solution or not, I don't think that the bill necessarily is, I mean, all credit to those who spent time drafting and negotiating it. But honestly, it's just trying to find a way forward. And those ways might not always be ways that make everyone happy or anyone happy. It's just the middle road.
Yeah. Josh, thank you. David, we talked about this in the virtual green room earlier. I wonder how much gets impacted. We have an election cycle coming up. For those who don't vote for clarity going forward, how does that impact their election chances in the midterms? And Amber's got something to say.
Yeah, Amber's really worked up about this. So, I think that we have to she's really trying her best to keep it calm. Look, I think people who have taken PAC money from, Fair Shake and other crypto organizations,
yeah,
some of those donations are based on, working on legislation and supporting legislation that supports the industry. And I think there will be blowback if these senators or representatives don't follow through on this. Look, the bottom line is that this is critically important, because I want to be something clear about something that we've talked about before. If we look at the SEC and the CFTC's March joint guidance, which classified 16 digital assets into a 5-category taxonomy, that's an administrative action. It can be reversed overnight by any future administration with a single memo.
Yeah.
The Clarity Act is the only thing that makes the classification permanent. And if the bill, fails before August 7th to go for the Senate for a full vote, every institutional allocation made in reliance on that guidance is sitting on the foundation that it can be pulled out with no congressional vote required.
Mm.
It's not a theoretical risk. That's the actual legal architecture of the industry right now. And, I just think that's really important to note. And at the same time, I do believe that the industry will move far enough along that it will be more difficult for another administration to pull that back.
Yeah.
We really need more casting and scaffolding around the rules than just administrative law, and administrative rules.
David, it's a good point. And Josh, I'd love you to weigh in. I know you can't stay with us long, but we've had this conversation, the three of us, and so many of our WSBA colleagues have joined us in DC. Is part of the lack of clarity around clarity, Josh, why we don't see some of the rules and guidance from SEC, for example, innovation exemptions? Are they waiting to see how some of this falls out, or is that an overreach on my part?
So, I don't know to what extent they're waiting to see how it falls out. I will say that, whoever goes first, there are, if I don't think they're waiting in that same way. I do think for some provisions, for example, the stablecoin yield, it did seem for a while like, the pause on final rules by the OCC may have been a reaction to see where it comes out here. But I would think that regulators, to the extent that they can go forward and put something into place, I would think that they would want to, in part because I think that I could be totally wrong, and I see reasons going both ways as I'm saying this aloud, but I do think, my understanding is that Paul Atkins and similarly Mike Seelig, they have clear views for how they want things to go and the path that they envision taking. And that may be different from sort of the compromise path that has to go through to get clarity passed. That being said, I think if you look at the latest draft of the Clarity Act, a lot of the toughest questions, or some of the toughest questions, they're reserved for later rulemaking.
Yeah,
I think that's really interesting.
Yep. And for the audience, by the way, if you've got comments or questions for David or Josh, please put them in the chat. That also, David shows us, Josh read through the 616 pages of clarity in an afternoon. I'm still bookmarking a bunch of stuff I need to catch up on for clarity. But Josh, a really good point. But David, let me ask one more question. The post that we had put out this morning on the WSBA channels, and folks out there, you get to see some really interesting stuff when you're a WSBA member. We got some feedback from our litigator friends, and two words came up, David. I'm not a lawyer, So please explain to me. Someone had noted, well, they could always go forward with wire fraud charges on the executive about crypto. David, I might be going out of our wheelhouse. What does that mean?
Yeah, I mean, I think the specifics of it are if wires are made, fraudulently and it's between states, I think besides there being federal jurisdiction, I think there are state laws regarding wire fraud, and on that basis, there could be some causes of action. Look, I also want people to remember that however you feel about people in the administration launching tokens, the tokens that were launched, by the president and his wife were prior to the president being inaugurated. So
Right.
there haven't been any tokens launched during this second administration. And I think a provision that prevents people in Congress from, launching new tokens while in office, I mean, I think that's a good step.
Yeah.
I think there's concerns about currying favor and all these things, and we don't have time to debate all that back and forth. But I think the bottom line is there's been a good faith effort to come up with something that is meaningful, and I think at this point, with everything else that's been resolved or left open, like we just need to get this done. And the last thing I want to say also is that look, there's bankruptcy language in Clarity that is really important.
Yeah.
That people's assets won't be part of the bankruptcy estate and they will be held separately. And that's really important. And like when you look at the totality of things, being concerned about where a possible ethics regulation will be enforced is a much smaller thing in the totality of what this means for the industry.
Yeah. David, Josh, I don't want to belabor the point. And again, I was kidding about the 616 pages, Josh, but I will be reviewing it. But I guess one of the things I wanted to ask you both, when you look at the ethics language that's been proposed in Clarity, it talks about things like divesting crypto holdings or going into a blind trust. My ignorance, David, Josh, but is that relatively standard for federal employees, or is that for the president and the executive branch, where they have to divest to go into a blind trust for other instruments? Is that normal language? Does anyone know?
I mean,
I don't know.
I don't think so when it comes to equities. I mean, we've had prolific trading by a number of people in Congress, and they haven't been in blind trusts. Hopefully somebody's making those trades for those folks. Otherwise, they'd be sitting at a desk all day with tickers floating in front of them. But no, I think this goes much further than where the rules on equities are. And again, I'll say this before, and we said it in our congressional meetings, and I said it in those meetings. I don't think there should be rules that are broader for crypto than there are for equities. I think they should be treated on the same level. And so, I think people should be mindful of that on both sides as we negotiate this bill.
Josh, David and I have been talking about creating the Congressional Trading Index. I figured that'd be some good kind of benchmark to build some business off of. Josh, David, appreciate it. You've said it, David. We've all been talking about Clarity's got to move forward. Some of the resistance from some law enforcement agencies has fallen away. Some of them have endorsed what the legislation is attempting to do. Politics aside, everyone in the industry is saying we should get Clarity, but the dynamics also shifted, David and Josh, when Larry Fink says Clarity needs to pass. And I guess my question for the three of us and for the audience is, you think that would have swayed a bunch of votes, and it hasn't. Any thoughts or insights into that? By the way, I said that and Amber got up and left.
She's over the politics. Look, I think we don't want to be viewed as taking sides one way or the other. I think generally our view is this is important for the industry, and it's really good that both folks on the TradFi side and the crypto side, have come to some agreement on this. And I'm sure the lobbyists on both sides have been working in the rooms quite a bit, and we've been fortunate to be in a number of those meetings as well.
Yep.
Look, the bottom line is it's unfortunate we're in an election year. I think if we weren't in an election year, I think some of this would not be as,
contentious. David, thanks. Josh, I know you've got to leave. Do you have a parting word, or are you just flying out for the weekend on the Gulf Stream?
I mean, no parting. I mean, no. So no flying. That's what I meant to say. I guess my parting word is I mean, look, we got a draft. Let's
We got a
celebrate the
draft.
draft, and keep pushing.
Be
So
grateful for those things. Yep. Josh,
okay,
have a great weekend. Always
thank
great to
you.
see you. David and I got to talk macro, and then we'll text you tonight about it.
Sounds amazing. See you
Take
later.
care.
Bye.
Bye.
David, really good points. And again, you're right. I don't want to belabor the politics of it. And Josh makes a good point. We've got a draft of a bill. There was a point not too long ago, we didn't even think we'd get that. So all of that being said, David, it's probably worth you and I pivoting to the macro picture as well as price action. And it is interesting to me. You know, I've discussed this before. Bitcoin is in the 64 range, 60 to 63 to 64 range. I'm looking at a 64 handle right now. I would have almost expected Bitcoin to react more negatively to the diminishing odds of clarity passing, but it's not. And I also had seen, I would love you to weigh in on a couple of things. One's the options action that's happening.
Yep.
But also, I think aside from today, we had net inflows of almost $1 billion into BTC ETFs. What's the undercurrent of everything that's going on, David?
Well, the good news is that we're seeing significant money go into the ETFs.
Yeah.
And some of it may be this rotation from the AI stocks and the semiconductor stocks, which have had a great run.
Yep.
And some people could be taking profits and moving it into crypto.
Yep.
Tom Lee's out there saying he thinks we get to 3,200 by the end of the year. And considering that we're at literally about 1,900 as I'm looking at the Bloomberg screen of my TV above me, that's a very meaningful, like 80+% return.
Yeah.
So I do think we are oversold, and I do think we are bottoming, but I don't know that we're finished bottoming. And I think also, frankly, my sense is that whatever is going on in the Middle East is going to get a lot louder this weekend. And my sense is that the markets are going to react to that over the weekend. And like we talk about always, we'll probably see that in the crypto markets first.
Yeah. David, we'll definitely get to the macro, and I think it's an important part of the calculus that we're discussing. Coming back to what we're looking at from the rotation, you and I have spoken about the possibility or the idea that AI is a bit frothy. We get the broad cap spend, CapEx of $1 trillion, I think, or hundreds of billions of dollars build out. We get the idea of rotating away from that. We also get the idea of rotating away from the big IPOs. So SpaceX is down significantly from the IPO prices. Is it just that investors are rotating away from those and allocating to Bitcoin for the short term, or is there an undercurrent of building that's really propping up BTC, for example, or ETH? And the reason I'm bringing this up, I'm thinking tokenization. Obviously, I'm thinking stable token issuance. I'm thinking kind of the undercurrent of these organizations becoming banks and trust companies. Is that undercurrent enough to get us moving forward?
I do think so, but I do think that we can't forget that between prediction markets and AI, a lot of that money that would go to riskier assets are going there. And I don't think that they're going to go away from the prediction markets. So I just think it's a matter of, is some of it being redistributed? And then I think in retirement accounts, are people now putting 2 to 4% in? Every 2 weeks they're putting money in their retirement. Are they putting in 2 or 4% in there? In Bitcoin or ETH? And I think a lot of people are doing that. So I think, as we can see more of that coming steadily into the market, it creates a little bit of a floor for Bitcoin and ETH.
Yeah. David, you said something I want to go back to. I'm going to rip up the script a little bit. Why won't people move away from, what is it about prediction markets that's glued people versus what trading on Robinhood, for example, was for crypto?
Look, people love trading on sports, and the prediction markets are just proliferating the opportunities to trade on sports. So I think 80% of the trading is on sports. And look, if you like to gamble, if you want to have fast money, and if you think you have an edge, you can see meaningful returns almost immediately, using prediction markets. But of course, you can also lose it all, at the same time. So I think there's some of that. I do think that AI is so transformational, it's hard to not put money and assets into AI.
Yeah.
I mean, I don't think anybody, even the most ardent crypto fan would say, like, you should definitely allocate, in crypto. I'm sure some of them would say, oh, we definitely have to have some exposure to AI and the underlying infrastructure.
Yep. And David, I'm going to digress for a split second. I'm assuming you made big money with Spain winning the World Cup, or am I misreading this whole conversation about prediction markets?
I had look. It was really fun. You can make
Yeah.
different, you can make bets on, is somebody score in the first half or not, or things like that. Personally, I was rooting for Argentina, but I'm not a big soccer fan. But look, those elements of it made it more interesting for people, and it's fun. But I can see where a lot of that hot money goes.
Yeah. David, when we look at that price action, just coming back to crypto, what's the options landscape? You and I often have conversations about what are the forward options looking like, and I want to leave perps and stuff out of it for a moment. What are you seeing in the options landscape particularly for BTC?
Well, I would go to ETH first only because we saw
Yep.
that I think the biggest put call ratio is for 3,200 by the end of the year.
Wow.
And
That's a nice
and
appreciation.
we're standing like right around 1,900, so that's that's like a 75% gain.
Yeah.
Look, I think there's still a bullish, leaning on the option market on the Bitcoin side. And we have had a pretty significant sell-off considering that, tech in general has done well this year. So,
Yeah.
look, we're not giving price predictions, but I would say this, considering where we've been, considering where the floor is, I think we have sort of began or are almost completing the bottoming out cycle.
Yeah. It is interesting because you also raised AI a bit early as we talk about the rotation, David. From an investment perspective, we've launched the AI and Quantum Working Group. I think you and Josh and several others are part of that, stepping away from investment rotation and looking at use cases. And I haven't read the article. I believe it was someone at Franklin Templeton, someone in the audience, correct me if I'm wrong, recently published the killer use case for crypto and blockchain is actually AI. And I wonder how much of that thesis is something that's top of mind for you, David.
It's definitely top of mind for me. And I guess the question that I would pose is it Ethereum? Is it
Ah,
Bitcoin? Or is it stable coins? Now, look, stable coins are a very important part of the ecosystem, and I'm very supportive of them. But there might be a difference in how people look at investing if they think ETH is the underpinning of agentic AI commerce,
yeah,
or Bitcoin is, or stable coins are. So now a lot of stable coins are built on top of Ethereum. So Ethereum would benefit from that in some way if a lot of the trading goes from, on Ethereum linked chains. But look, I think they're very much intertwined. And look, another thing that, we see people using is using like decentralized knowledge graphs. So getting output from AI and then
yeah,
using these DKG graphs to confirm whether a fact or some artifact is actually legitimate or not.
yeah.
So the blockchain ultimately may end up being the place that the output from AI goes to confirm its legitimacy.
Right. And on a scale and velocity that would far exceed, in my mind, what people like you and I could do on a day-to-day basis. When we really look at agentic AI, you're talking about potentially big volume and big velocity of essentially microtransactions, correct?
Yeah. Look, I mean, crypto was really made for this. I don't know that when crypto was created by Satoshi Nakamoto that he thought that AI would move this fast. But crypto is really an elegant solution for AI to use to transact, and our agents could be using it in the background. So
David, yeah, sorry, go ahead.
it's really intertwined.
Yeah, David, it's interesting because I spend so many times with lawyers, so much time with lawyers like you and Josh and so many others. As I look at agentic AI and autonomous finance and the stuff you and I have talked about in the recent past, there are legal and regulatory implications for this as well. And I don't want it to be a legal or regulatory show only, but what is an agent in an agentic AI world where they're buying and selling for our portfolios, for example? Aren't those still things that need to be solved?
I mean, there are some interesting thorny issues. I think that they will get solved. I think that the business community will probably solve a lot of them ahead
Yeah,
of where laws and regulations will come.
yeah,
But interesting questions. What happens if your agent trades with a sanctioned wallet? You know, uh,
right.
just things like that. So I think there's a lot of that that's being thought about and worked on. And we did see a Cahill piece looking at one part of that equation.
Shout out to our friends at member firm Cahill. Yep.
So I think there's a lot to come, but I think, this is where things are moving, and the law is going to have to move with it.
Yeah. David, there's still a lot to cover. We've only got a few minutes. I want to get us to some of the macro stuff. Let's talk about the economics of it. And you and I've said it. I've often said weird economy. Obviously, the impact of what's happening in the Middle East and the Iran war. I think oil broke $100 a barrel. It hadn't done that since, I want to say, May. Someone correct me if I'm wrong. So we're probably looking at heating up inflation numbers, David, on the heels of finding out that jobless claims dropped. So again, it's this weird kind of economy where the underlying economy feels relatively strong. Jobs aren't being lost wholesale. The kind of slaughter of jobs because of AI replacement hasn't really panned out yet that way, apparently. What do you make of the market, and how reactionary will we be given what's going on in the Middle East?
Well, you know how everybody reacts to, these statistics on a monthly basis. And look, I don't think it takes a rocket science to figure out that if oil stays above 100, whatever gains in CPI we had in June, July is just going to look a lot different, or maybe the total opposite. And you lose all those gains. So I think, it's going to be 1 month of good inflation data followed by 1 month of bad inflation data.
Yeah.
And the trickle-on effect that the higher oil prices have.
Yeah.
So that's why it's so hard. It's really like a whipsaw, and I do think in some ways the crypto market front ran a rate cut this year, and it looks like it's harder and harder to see that happen.
Yeah. David, just to that point real quickly, as I look at the inflation data, and you correct me if you disagree with this thesis, I'm finally coming around to more thoroughly understanding the Fed's preferred measure, which is PCE. It's not CPI, it's not PPI, because it strips out the most volatile aspects of prices. And you said it, prices, CPI will drop 1 month, the next month there's a flare up in the war, inflation's back. They've got to look at the smoothed out averages, correct?
Yeah, I agree. The problem is that individuals are feeling those things that you want to strip out.
Yeah,
that is the problem. Like, I think the PCE is a more accurate estimate, but the problem is that the regular consumer is going to eat another $20 in gas for a month and eat some of these other expenses on an ongoing basis. So that's where the rubber meets the road. But I'm with you.
Yeah.
Like, I think PCE is important. I do think that because our numbers are so choppy, I think we need to think of a better way than everybody reacting to numbers that are just so, they're so data driven, but the data, like we've talked about many times, is imperfect.
Yeah, and look, we're starting to see those, and whatever the political landscape of Kevin Warsh becoming the Fed chair, he is making changes that will make, I believe, the markets less reactionary, David. So it's, every press conference won't hinge on every single word that comes out of the chair's mouth. They'll probably start moving away from the dot plot. It'll just smooth out the reaction function of the markets every time someone at the Fed says or does anything.
Yeah, and look, I don't know if 2% is really realistic anymore.
But I feel like we're losing that battle, though. I'm with you, but a terminal rate of 2%, I don't think anyone believes us when you and I say it doesn't make sense.
I think if you ask people to look at like what they've been spending in the last 5 years, I think it totally doesn't make sense.
Yeah,
I just think that there needs to be a little more reality towards that. And
history, right?
Yeah.
Let's let you and I go back long enough in the markets to remember that 2%, like 0% inflation that happened for a better part of a decade, or 2% historically, is not a realistic inflation target. It hasn't been.
No, I totally agree. And if it was, that means people's salaries and compensation would stay flat year over year. And I don't think anybody wants that either. So, I think a year of nobody getting raises, I think people would much rather have a couple of percent inflation and get raises than not.
It's a good point, David. And one last thing, and you sort of referenced this when it is a human conversation and people are impacted by these prices, which impacts whether or not they will buy crypto or they will buy food or whatever, the challenges there. It also does talk about consumer sentiment, which has actually been getting battered the past few months. David, let me ask you this question. I should know this about you, but I'm going to ask it publicly. Are you a contrarian when it comes to consumer sentiment? Meaning, is a negative consumer sentiment number actually bullish?
I think the problem is like we have this K-shaped economy, and I don't think that the consumer sentiment really captures the sort of top end of the economy where people are spending and doing. I think if there was something that was more, tactical and more precise, and if we saw the people who are spending the majority of the money really pulling back, that might be helpful. But I just think that, in the totality, look, if gas prices go up more, maybe you're not going to go out to dinner as much or something like that if you're affected.
Yeah.
But it's also very, very cyclical right now. Like we have to remember, we have two, meaningful, I don't know if you want to call them wars, conflicts. I mean, I think you could say it's a war between Ukraine and Russia. We have two very significant conflicts that are affecting, goods, raw materials, rare earth, and, the movement of oil and gas. So, I mean, I think right now, whatever inflation we do have isn't the norm. It's not what the norm will be because this isn't normal times.
Yeah. And again, David, you also alluded to something we've talked about, and I don't want to really go too far into it, but actually how the data is collected, that process and systems are 50 years old.
Yeah.
So, in a dynamic economy, global economy like we have, the data points are so many and so diverse that the processes for getting that data are not up to where they need to be for the 21st century.
Yeah, maybe even for the 20th century. But
or maybe even the 20th.
But look, people are trying, and I think we should give, Fed Chair Warsh credit for like trying to be thoughtful about this and come up with a different way and hopefully a better way.
Yeah.
But I think, looking at our industry right now, Ron, like we are on the precipice of something really meaningful happening.
Agreed.
I think for those of our audience who aren't used to the day-to-day dealing, sort of the sausage making, we have a bill. We have a president who's offered ethics language, the first really ethics language of any kind that's really been offered up by a president regarding a specific asset. And I just would hate to see that the idea of enforcement is the one thing that would prevent a whole bill for our industry not passing. So my hope is, as the optimist, is that people understand that, maybe the ethics language isn't perfect. Maybe there's some other provisions that aren't perfect, but overall, this is, a better good for society and a better good for our industry.
David, I agree with you. Look, there is progress being made. And the truth of the matter is, let's remain hopeful, A, about clarity, but B, builders keep building. There's not a day that goes by where you and I aren't messaging or conversing or chatting with someone in the WSBA or in our industry segment that's talking about stable tokens or tokenization or real world assets. And that's going to be a multi-trillion-dollar world because it's just going to be part of the global economy.
Yeah. And look, and I'm not the first person to say this, but it's going to move forward. And whether it moves forward here, or it's going to move forward in Europe and Asia, it's going to move forward. And we might as well be, either at the forefront of it or right in the middle of it. And it just doesn't make sense to exclude ourselves.
Agreed. David, we're going to wrap it there. I've got one last question for you. Where are the alts, David?
Oh, boy, the poor alts. Look, we're not going to really see a rally in alts, until we see the broader sentiment improve in crypto.
Fair.
But I do think one thing that has been underreported is that if clarity is passed, I think it will give regulated institutions the capacity to offer a lot more tokens to their customers than they are right now. And I think that could be really bullish.
So you mean brokerage firms, the wirehouses kind of thing, the retail stuff?
Yeah, look, I mean, there's this 5-part test, that the SEC has put out there. But I think with having clarity in place, that would give, regulated entities more comfort to offer a broader range of tokens. I mean, we even saw, I think, an S&P index token crypto fund, which didn't include Bitcoin, which was interesting, have like a top 10 or top 15
Yep.
crypto fund.
Yep. David, go
Last
ahead.
thing, again,
Yeah.
it's valuation, Ron. Until people can really value and understand as a token holder, what am I getting? What benefits accrue to me, the token holder? It's just still really hard for a lot of people to value the token.
Yeah, which is the exact same conversation about what am I getting when I hold a token that says it represents a private equity, for example, or represents SpaceX. What are you getting for that token is an important part of the conversation. David, let's leave it there. If we're still talking about clarity this time next week, maybe we try to pull in one of our litigator friends to talk about what ethics violations would look like in the future. David, what do you got coming up this weekend?
This weekend's going to be, a little calmer. I'm going to be obviously watching to see what happens with, the negotiations.
Yep.
I do think things are going to flare up this weekend in the Middle East, so I'm going to be watching for that. That's what the crystal ball is telling me for this weekend.
I would never doubt your crystal ball, buddy. I've got a bunch of meetings in New York City with WSBA members, and interestingly, Josh is hosting at her firm an AI and quantum session, which is looking really interesting. We'll report back next Friday. For everyone in the audience, thank you so much. If we missed anything you wanted to cover, please email David and Josh and I, info@wsba.co. We'll cover it. David, let's leave it there. Have a great weekend, buddy.
Take care, everybody.
Take care, everyone. Bye-bye.